Let me welcome on the show Shveta Arya, who's the MD of Cummins India. Shweta, always a pleasure to speak to you on NDTV Profit. Now, my first question, you have stated in your commentary that the headwinds from the export market are here to stay because of the geopolitical tension, and therefore the demand is also reducing and the trade flow is getting impacted. What is your sense of the outlook from your exports business for the coming quarter and the outlook and guidance?
Exports has been a mixed bag for the last few quarters because the geopolitical conditions in different countries, there are some credit issues. There is now inventory buildup in the channel as well. And we see all of those playing out in the next few quarters. We see many times that in the last quarter of the calendar year, our distributors globally do some inventory corrections. So that is another thing that might impact the numbers. But yes, geopolitical issues, people holding on to their own capacity expansions in these different countries, largely owing to where will the tariffs land for them. Those kind of issues are playing out.
Hi Shweta, this is Anushi joining in as well. You just spoke about the export outlooks that we are looking forward to, while for the second quarter we've seen about a 24% of our growth. So considering all of these headwinds which are there, is this kind of growth sustainable going forward?
There were a lot of orders in this particular quarter that we were able to execute. Europe market came in strongly. But going forward, as I look at the order board, I see a little bit of softening. That is in the very short term. Difficult to say right now how the medium term will look like. This is just the short term picture that I'm able to share at this point in time.
Understood. Coming to the second quarter numbers, now it's a beat across the key metrics that we are looking at. In the first half, you've clocked in about a 27% of a growth, and this is mainly aided by the power gen segment that we are looking at. Strong execution in terms of data centers is what we are seeing. Is the scenario similar for H2 as well? What's the kind of outlook that we should build for this FY26 and for even upcoming years as well? Would it be data center driven growth that we'll be looking forward to?
So the growth in this quarter, one was exports that came in. From a domestic market perspective, yes, very strong power generation growth, which came in from many segments. This particular quarter, yes, there was good data center execution that we were able to do. Some of these projects are lumpy in nature. They come in once in a quarter. They are not very well divided across all the quarters in the year. So overall, from the year perspective, while we see growth in the data center business in power generation, we also see growth in other segments. Going forward, we do see there is a possibility for the country to see higher data center growth, remains to be seen. For this year, this financial year, it would be not just data centers, also other segments. And then the industrial market, although this quarter is almost flat to slightly down, but that market has also been growing through construction, railway, marine segments. And our aftermarket has been growing at a very steady pace and a decent growth rate. So for this year, those will be the growth drivers.
Right. So Shweta, just on that industrial business that you spoke about, 5% is the kind of downtick that we are looking at. And this is on the back of the mining business also that we are looking at, the end user industry, wherein, those tenders were not in place. So what's the kind of growth, if you have to quantify a number, that we should see from next year onwards?
So we are from the industrial market, all the segments where we operate, rail, marine, mining, defense, oil and gas, these all are very, very connected to the infrastructure growth in the country and very specifically the government outlay. The construction segment definitely depends on the construction activity, a little bit of monsoon dependency. So going forward, if the infrastructure spending by the government continues, we do expect double-digit growth in the industrial business as well.
Understood. And coming to the margin expansion also, we've looked at about 21 to 22% of a range here. But now with the pricing stabilizing on the count of higher competition as well, along with some softness expected in exports, would this number be sustainable? What's the kind of margin outlook that you have for FY26, and even if we can project it forward to FY27?
Margin is a function of product mix and some cost reduction efforts that we do. The product mix is really dependent on the orders that get built up, so very difficult to predict and can change from quarter to quarter. Cost reduction efforts for us have been going on for a while, and they really help us improve our margin profiles, which will continue. And then in this particular quarter, we did see volumes helping us, and there was leverage that we could take advantage of. So if the volumes continue at this level, then we could sustain the margins. Definitely, how exports come in, how different segments play in the domestic segment, leading to what product mixes, those can change our margin profile. Our endeavor is always to maintain this kind of margin profile.
So much, Shveta, for joining and sharing that outlook on Cummins India. So, well, that's the management double-digit growth guidance is what we should anticipate for Cummins India for FY26.